Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial report of Innovative Industrial Properties, or IIPR. It's about real estate, but not just any real estate, it's the kind leased to cannabis growers. Talk about a budding industry, right? Get it? Smirks. But seriously, this report is a mixed bag, so let's get into it. The big picture first, IIPR, a REIT that specializes in properties for the regulated cannabis industry, saw a slight wobble in its rental revenue this year. It barely budged, but still, a decrease is a decrease. And while net income is still strong, it dipped a bit too. This report is for the year 2024. They're essentially landlords to the cannabis industry, leasing out specialized industrial properties to state-licensed operators. Think greenhouses and warehouses specifically designed for growing and processing cannabis. Interestingly, they did sell a property in Los Angeles, bagging over $9 million and a sweet lease termination fee from the tenant. But hold on, this sale actually resulted in a loss when all was said and done. How does that work? Well, even though they made money on the sale, the overall accounting saw it as a loss. That's a corporate decoder first. To keep things moving, they also increased their borrowing capacity, basically a financial safety net they can tap into if needed. This is a common move, but always good to see a company preparing for different scenarios. IIPR's properties are mostly industrial, but they also have some retail locations in the mix. These retail spots are your dispensaries. The vast majority of their collected rent, about 92%, comes from those industrial properties. So how does IIPR stay competitive? According to this report, it is by having an experienced management team, that their revenue is recurring and steadily increasing, by using rigorous investment strategy and banking on the growth in the regulated cannabis industry. The legal cannabis market is still projected to grow. Despite current challenges, experts think sales could jump significantly in the next few years. This makes the company believe this presents a good opportunity for IIPR to supply needed funding. Now let's talk tenants, as they are the most important. IIPR is heavily reliant on just a few key players. PharmaCann tops the list, accounting for a significant chunk of IIPR's rental income, followed by other big names in the cannabis world like Ascend and Green Thumb. Depending on a few clients is always a risk, because if a tenant is facing problems, it will invariably become IIPR's problems as well. IIPR's properties are spread across 19 states, so they aren't putting all their eggs in one geographic basket. But remember, each state has its own unique regulations and market quirks. Accessing capital has also been a big hurdle, and the report states that capital raising for US REITs is volatile, while it has been in general for the cannabis industry for quite some time. When they can't get funding, they're limited in how much they can grow. Speaking of problems, IIPR has had its share of tenant troubles. Several companies have defaulted on their rent, forcing IIPR to take back properties and scramble to find new tenants. These situations aren't isolated incidents, raising some flags about tenant stability. They've been renegotiating leases and offering rent deferrals to help struggling tenants. While this might help in the short term, constantly adjusting leases isn't sustainable long term. Even PharmaCann, one of their biggest tenants, recently defaulted on payments. This is a huge red flag because they're now trying to work out a deal to keep them afloat. But if PharmaCann can't get its act together and refinance their debt, all bets are off. Of course, the biggest wild card is still the federal government. Cannabis is still illegal at the federal level, so the legal landscape could change overnight and create big headaches for IIPR and its tenants, like all state-level cannabis activities being shut down. One thing protecting them is the Rohrabacher-Blumenauer Amendment. This rider provision has been appended to the Consolidated Appropriations Act since 2015. Under the terms of the Rohrabacher-Blumenauer rider, the federal government is prohibited from using congressionally appropriated funds to enforce federal cannabis laws against regulated medical cannabis actors operating in compliance with state and local law. While this is a big plus, we need to be ready as it expires soon and could mean an even bigger enforcement of laws against IIPR and its tenants. The company admits there's no guarantee that federal prosecutors won't decide to crack down on cannabis operations where IIPR owns properties. Talk about uncertainty. Banks remain hesitant to deal with cannabis businesses, and this in turn makes it hard for them to operate, which may significantly impact operations, especially those publicly traded ones. And of course, we can't forget the other regular risks of owning real estate, from environmental regulations to the Americans with Disabilities Act, even those they admit are challenging. Okay, putting it all together, what's the verdict on IIPR? Well, they operate in a high growth but also high risk industry, the regulated cannabis industry. On the upside, they have a solid management team and long-term leases in place, and the market is expected to keep expanding. Their debt is manageable and they have investment grade credit rating, though a downgrade would make things trickier. They state that covenants in their debt instruments may limit our flexibility and adversely affect our financial condition. They acknowledge and are trying to solve that their tenant base isn't particularly diversified. Also, the regulatory environment is always a threat. As such, there is a likelihood of share prices to be volatile because of the nature of their operation and the growth. Ultimately, a lot hinges on whether IIPR can navigate these challenges, keep their tenants afloat, and maintain a smooth relationship with federal regulators. Based on the information, there is no easy way to say with certainty whether they will manage or to what extent. So given this uncertainty and the current financials, a reasonable price range for IIPR would be between $90 and $110. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please subscribe, like, and let me know what companies you want to know more about in the comments below.